Hey everyone, Jen Berbas with the Berbas Group coming to you with a September newsletter. I'd like to review the August numbers. I hope everybody's enjoying the amazing fall weather in Austin and getting back to the fall season in Austin. Let's just jump right in here. The big story here is the inventory numbers. Inventory is up 20% from the previous year, from this time the previous year. Average price is coming down just a bit, kind of normal for this time of year, and with such high inventory, it's not really all that surprising. This is the pending units. You can see earlier this year, when the year first started, we thought, okay, we're going to see a little bit more activity than the previous year, that light blue line. But then sometime around March, it switched and the pending units dropped below what last year was. We're going to show an interest rate chart here in a second and talk about that, but interest rates were certainly part of the equation. This is the inventory that we watch on a weekly basis on our team. We collect it just because we don't know anywhere else to get like the core downtown data, so we collect that. It lets us know week by week what's happening. So one of the really interesting things I think is earlier this year, when that previous slide, the pending units was above last year's, we put a few properties on the market because we thought, oh, wait a second, we can see the pendings are picking up. The inventory hasn't quite increased over the winter. It drops down and it hadn't quite gone up again. So we put a few properties on the market and we were able to force a multiple offer situation. Now it wasn't like crazy like the good old days in 2021, but we still got multiple offers. And that's just because the active inventory was a little bit lower over the winter and then the pendings had gone up. But as the year progressed, we really haven't seen that. Pendings have dropped quite a bit. And then the inventory did peak to much higher than last year. So the top blue line went up to high inventory and is starting to drop now, which we kind of expect going into the fall. We watch this on a week by week basis because it gives us the earliest indication of what we should be seeing in the market. All right. This is new listings by month. This is that inventory that we're talking about. They are dropping off. We expect new listings to drop off into the fall. People are getting those last listings on the market right now. And just, we've always said this to our sellers, if you're not sold by Halloween, it's probably best to wait until the spring. That's when people start acting like lunatics because new houses are coming on the market and they've been inventory deprived all winter. We think everything is really being driven by interest rates. We'll talk a little bit about the Fed in a second, but the job postings in Austin are like a derivative of those interest rates. Jobs are way down since over the last year. And you can see this chart here. This is the Indeed postings for jobs in Austin. And if interest rates do come down, which the Fed is telegraphing that they're going to, then we do expect the job hiring, or we hope the job hiring to increase in 2025. This is a chart of interest rates. What I think, this is the 30-year mortgage rate. What I think is really interesting is it's come down about 1.5% from its high. And so there's still this like dialogue out in the public that interest rates are high, but they're down an awful lot from their peak of 8%, right? So about 1.5. As always, real estate is hyper-local and hyper-situational. Every single neighborhood has its own rhythm to the market and its own inventory. And every individual has their own goals for real estate, either on the buy side or the sell side. So feel free to give us a call. We're always happy to help.